Have you ever felt like your bad credit is a permanent scar that stops you from getting help when you really need it? Imagine staring at a medical bill, a broken down car, or even just a rent notice, knowing you do not have the cash and thinking, who would even lend me money with my credit score? What if I told you there's a way to get a personal loan even with bad credit, but it comes with risks you might not see coming? Stick with me, because today you'll learn the real pros and cons of bad credit personal loans. And there's one hidden danger most people never think about until it's too late. Number one, what are bad credit personal loans really? Let's start simple. A bad credit personal loan is just a regular personal loan, but designed for people whose credit scores are low. Instead of denying your application outright, lenders who offer these loans are willing to take on the risk for a price. You can usually borrow a fixed amount and pay it back monthly over a set period. For example, someone with a 550 credit score who needs $3,000 for car repairs might be able to borrow from a lender who specializes in bad credit loans, while a regular bank would just say no. But here's the kicker. These loans come with trade-offs you need to understand. Number two, the big benefit, access to cash when you need it. This is probably the biggest reason people choose bad credit personal loans. When life throws a curveball, like an unexpected medical bill, you might not have time to save up. A bad credit loan can put money in your pocket fast. Here's a real-life example. Derek in Ohio lost his job and fell behind on bills. His power was about to be shut off, and his landlord was threatening eviction. With no family to help, he got approved for a bad credit personal loan in just 2 days and avoided disaster. It's about having options when you feel like you're out of them. Number three, flexible use of funds. No questions asked. Another pro? Unlike some loans, bad credit personal loans are typically unsecured, which means no collateral, and you can use the money however you want. Pay rent, fix your car, cover emergency dental work. There are no strings attached. For example, Sarah used hers to pay her rent during a tough month, then also bought groceries and gas. No one was looking over her shoulder telling her how to spend it. That kind of flexibility is rare when you're in a tough spot. Number four, a chance to rebuild your credit. Here's a hidden benefit many people don't realize. If you get a bad credit loan and make every single payment on time, you're proving you can be trusted. Most lenders report your payments to the credit bureaus. Over time, this can actually help rebuild your credit score. It won't happen overnight, but it's a step in the right direction. Think of it as using one small loan to prove yourself and open better financial doors later. Number five, but the interest rates can hurt. Now let's talk about the first big con. Because you're considered a risky borrower, lenders charge much higher interest rates. We're talking rates that can be 2, 3, even 4 times higher than a regular loan. For example, a typical personal loan might have an interest rate of 8%, but a bad credit loan could easily be 25% or higher. That means if you borrow $2,000, you could pay back $2,500 or more in interest and fees. Ouch. It's like saying yes to quick cash, but agreeing to pay much more later. Number six, watch out for hidden fees. Another thing you need to watch. Fees. Some bad credit personal loans come with application fees, origination fees, prepayment penalties, and late fees that can pile up fast. For example, Maria borrowed $4,000 but didn't realize her loan had a 10% origination fee, which meant she only got $3,600 in her bank account. And when she paid it off early, she still had to pay a prepayment penalty. Always read the fine print before you sign anything. Number seven, the debt trap danger. Here's the part that scares me the most for beginners. If you're already struggling to pay bills, adding a high-interest loan can make things worse, not better. You borrow once, then you have trouble paying it back. So you borrow again and again. This is called a debt cycle or a debt trap, and it's a very real risk. I've seen people start with just a $1,500 loan and end up owing 3 times that after a year. It's like quicksand. If you're not careful, it pulls you in deeper. Number 8. Some lenders are predatory. Not every lender has your best interests at heart. Some bad credit lenders use shady tactics, like burying terms in fine print or even changing rates after you sign. For example, in one case, a lender promised low monthly payments, but stretched the loan over 60 months, leaving the borrower paying back double what they borrowed. Always check reviews, ask questions, and compare at least 3 lenders before deciding. And if a lender ever pressures you to sign today, that's a red flag. Number 9. Are there better alternatives? Now, here's a question you might be asking yourself. Is this really my best option? Not always. Before jumping into a bad credit loan, consider alternatives. For example, borrowing from a friend or family member, asking for a paycheck advance from your employer, setting up a payment plan directly with your creditor, even a secured loan, like putting up your car as collateral, might have lower interest rates. These options can save you money and stress. Number 10. How to protect yourself if you decide to borrow. If you do choose to go ahead with a bad credit personal loan, here's how to make it work for you instead of against you. First, only borrow what you absolutely need, not what they offer you. Second, compare lenders and get the best rate you can. Third, read the contract carefully and ask questions. And most importantly, make your payments on time, even one late payment can wreck your score even more. An example. Kevin needed $2,500 fast for medical bills. He compared 3 lenders, picked the one with the lowest rate and no prepayment penalty, and paid it off in 6 months. His credit score even improved. Number 11. How much should you borrow? This is a big question beginners often get wrong. Just because you can borrow $5,000 does not mean you should. Remember, every dollar you borrow comes with interest. The more you borrow, the more you have to pay back. For example, if you only really need $1,200 to cover rent, but the lender says you qualify for $4,000, don't take it all. Borrowing more than you need is like ordering a giant plate of food you can't possibly finish, except you still have to pay for all of it. Be honest with yourself about what you actually need right now. Number 12. Short-term versus long-term. Which is better? You'll also have to choose how long you want to take to pay it back. Shorter terms mean higher monthly payments, but less total interest. Longer terms mean lower monthly payments, but you pay much more in interest overall. Here's an example. James borrowed $3,000 on a 12-month loan. He paid about $500 in interest. On a 36-month loan, he paid over $1,200 in interest. More than double. If you can afford the higher payments, a shorter term is usually better. Number 13. Don't ignore your budget. Before you even apply for a loan, sit down and look at your monthly budget. Do you really have room in your budget to make those payments? Because if you fall behind, it's not just late fees you have to worry about. Your credit score can drop even more. One trick is to practice making the payments before you even get the loan. For example, if your loan payment would be $250 per month, start setting aside $250 every month for 2 months. If you can handle it, great. If you can't, then maybe the loan is not a good idea yet. Number 14. How to spot a scam. We need to talk about this because bad credit borrowers are the top targets for scams. If a lender guarantees you approval without even checking your information, that's a huge red flag. If they ask for upfront fees before giving you any money, run. A real lender might charge fees, but they'll deduct them from the loan amount, not ask you to send money first. And always check that the lender is licensed to operate in your state. You can verify this through your state's financial regulation website. For example, a woman in Texas thought she was getting a $2,000 loan. She paid a $200 processing fee up front, but then the scammer disappeared, and she got nothing. Don't let that happen to you. Number 15. Plan your exit strategy. 1. Mistake beginners make is treating the loan as free money and not thinking about how they'll pay it back. Before you borrow, map out exactly how you'll repay it and what sacrifices you might need to make. For example, maybe you need to cut out eating out for a few months or cancel a streaming subscription to make room for payments. The more focused you are on paying it off quickly, the less interest you'll pay and the sooner you'll be free of the debt. Even paying just a little extra every month can save you hundreds in interest. You see, a bad credit personal loan is not good or bad. On its own, it's a tool. And like any tool, it can either help you build your future or hurt you if you misuse it. Now you know both sides of the story, the good, the bad, and the ugly. The choice is yours. So here's my final question to you. What's the smartest way you would use a bad credit personal loan if you had to? Let me know in the comments. I'd love to see your ideas.